Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, last one of 2023. I'm recording this late Friday morning, as usual, on Friday, December 29th. Obviously, whether you're a subscriber or not, I hope you have a great holiday weekend here and wish you and yours a healthy and prosperous 2024. Our offices obviously will be closed on Monday. We'll be back at it Tuesday. If you're a Cabot Top 10 Trader subscriber, issue will come out Tuesday after the close, and then we'll basically be getting back to a regular schedule after that as people come out of their slumber. Not too much new to report. It's been kind of a typical holiday week, mostly up slightly on the indexes. Individual stocks basically quiet. Some are down a little bit, some are up a little bit. It's been maybe a little bit movement among a couple of names, but for the most part, it's been quiet, which is fine by us, and obviously keeps the vast majority of intermediate term evidence positive. Looking ahead next year, or at least in the next couple of weeks, just a couple thoughts. Number one is just January as a whole, but early January especially, just a lot of cross currents to be aware of. There's hedge funds that sold out and then they're going to reposition. There's people who are taking profits, tax profits, waiting until the new year. There's a couple, I think there's usually a retail and a medical biotech sort of conference, with a ton of companies that present early in the January usually. Then you have earnings season, so there, and of course we've had this run, so I'm not saying we're going to come down, but it's not unusual for some of these, at least the names I focus on, to sometimes one day they're down 4%, the next day they're up 4% sort of thing. I'm not saying to ignore the action on a day-to-day basis, but it's just something to keep in mind here. There's usually a lot of these cross currents, and sometimes you do get some violent moves as people sell and buy, or buy and sell, and there's some rotation among sectors and stuff like that. Okay. The other thing I would just say is, the good news is, I mentioned last week, some of the growth stocks have kind of stalled out, I guess I'd say, over the last 2-3 weeks. The good news is they've held firm and held very tight. Mike, isn't that just a calendar? Well, yeah, maybe, but it is what it is on the chart. I am just seeing a lot of stocks that had huge, 6 to 8 week runs, or maybe 4 to 6 week runs, I guess I'd say. And now they spent 2 or 3 weeks kind of treading water sideways here in a very tight range. We'll see how it plays out, but it could be an opportunity to add on some shares. Maybe you get a little shakeout beforehand, like I said, in early January, but just, some proper trading. But overall, I'm bullish, but I'm also not leaving my brain at the door. We've had a big run here. There's a lot of, short-term good news is out sort of thing. So let's just see what happens here as the calendar flips. In Cabot Growth Investors Model Portfolio, we added a small position here. We're about 20% cash. I wouldn't mind some of that 20% cash is sort of, quote, dedicated to a couple stocks we have small positions in I'd like to buy more of. So if things go well, hopefully that can happen early next month. But as always, we'll just take it as it comes. Okay, let's hop into the charts. As usual, I'm using a program called MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. I'm not going to spend a ton of time here. You can see we're selling off here. Last day of the year so far, NASDAQ's down 80 points basically as I record this. So we'll see what happens. We're extended. We have been for a while, and obviously we've just kind of floated higher here. This day, the only thing I would say short term, I'm not going to get into all the details. I mean, the intermediate term trend is clearly up, and there's clearly a lot of daylight, and that goes for basically all the indexes. The one thing I would just say is short term, we did have that big reversal last week on Wednesday, I want to say, or Thursday. I think it was Wednesday. And then it just kind of went up from there. There's usually some reverberations from that. I don't mean like, we're going to top here and come down. I just mean usually there's, if you saw one day of selling, it's not like everybody who wanted to take profits did so. So like I said, it wouldn't surprise me. Maybe it's today. In the new year, maybe you get some shake and bake action sort of thing. But overall, from an intermediate term perspective, it all looks pretty good. I'll just run through the indexes here. S&P 500, same sort of thing. Mid caps and small caps have actually been stronger. Again, pulling back in here, but look fine. And you have like the IWM, which is small caps, getting hit today, but overall looks pretty good. The one thing I would say too, I wrote about in Growth Investor, listen, I follow things that I call blast off indicators, which kind of measure when the market gets hyper overbought. I've talked about these before. Last couple of years, they've been okay. I mean, they actually haven't been that bad because they're more of a longer term measure. So if you look back now to the signal, say the 2-to-1 signal that came in January, not so bad. But at the same time, they've been less than pristine, leading to some deeper than normal pullbacks and stuff. We have seen some of that recently. One of them, I think maybe I mentioned this last week, but the Russell 2000, this is the IWM, but the index got 13% above its 50-day moving average, which is very rare. And it's kind of coming out of a correction. There's different ways to measure that. It's only happened a few times in the last 40 year, 35 years, something like that. And it's always been really near the start of new bull phases. Okay, now 5 signals is not the be all end all indicator. So we'll see what happens. But we are starting to see, a lot of new highs, a lot of stocks acting well. Obviously the index is in gear. The Fed is off the market's back. Now we're also seeing some of this overbought stuff, very, very overbought stuff. In my opinion, it should portend good things next year. Could I be wrong? Yes, it could. We could be wrong. Maybe the Fed says we're not quite done yet, or something goes wrong in the Middle East. We'll have to take it just like we always do week to week. But overall evidence like that is positive. So overall, we're bullish. But yes, I think near term, you wouldn't want to see this go straight down to like the 25-day line in a day or two. But could the IWM chop around, pull back a couple percent, something like that? Absolutely. So let's just see how it goes going forward for small caps and the rest of the market. Instead of diving into all the sectors, let's just get into some stocks. I kind of divvied some of these into some tightness, some stocks that are tight right now. They could still use a pullback, but I'm just kind of flagging the tightness either after earnings or after a big run. Some names that are super strong that really are looking for a shakeout. There's some overlap there. Some of them are tight. You could look for a shakeout. And then some I'm going to say newer names. I don't mean newer like IPOs. I just mean maybe newer to the rally. Maybe sometimes, like I said, in January, you do get some rotation. So you get some of these stocks that are sort of set up. Maybe they have already had runs early in the year, so it's not like they haven't really gotten going yet at all. But they've just kind of been playing possum here going forward, for this rally, and maybe they can get going when the calendar flips. Anyway, without me talking too much. So just noticing. So this is like shift 4. It's easier to see on the weekly chart. It had a run here, okay, and then it had a big, this was 44% deep, which was a big correction, but it's really totally changed character. There is some M&A chatter here, so that's kind of part of it. But you've just seen there's been no selling at all, and you can just see right here, we'll see what happens today, but so far, it looks like 3 weeks very, very tight. Doesn't mean you can't, sometimes you get this tightness and they try to get going, then they come back and they chill out a little bit longer. But my point is just, the longer it can kind of hold in here or even pull back a little bit, maybe the moving averages catch up. It's kind of an interesting idea. CrowdStrike has been a big cap leader, the whole time. Again, the weekly chart, you can just see it actually broke out in September ahead of the market, and it's really accelerated higher here, and so far, no pullback. So that tightness I'm just flagging. Again, maybe it does pull in here, has a little bit of shake. I don't think a shake in some of these names, I don't want to see it, but if you had a 3, 4, 5% sort of shake over a few days in some of these names, probably not the worst thing, probably would shake the tree a little bit. Some of the recent earnings winners, UiPath, pulling in today. Again, weekly charts just kind of give you the better perspective, but here's the big move. And since then it's chopped around a little bit, but no pullback, pretty tight in there, elastic, pulling back a little bit today, but you can just see it's really probably 3 weeks closing tight. We'll see what happens. But after this huge move, very little volatility. Even a big name like Workday, WDAY, had this uptrend this year with the big cap tech stocks, the Qs and stuff, did break out. And you can just see here, here's your earnings gap. But just in general, very, very tight in here, very, very proper. Doesn't mean it can't shake out, but so far, so good. The difference, I guess what I'm saying here is things can always change, and maybe they do, but, we're not seeing even normal, Workday could have easily pulled into, here, and then kind of futzed around here, and then rallied, instead it actually followed through on the buying. It had one bad day, and it's just been kind of straight sideways since then. So just seeing a lot more of that action, which is, definitely more proper. It's telling you people don't want to take profits so far. KKR, bull market stock. It's the strongest one. It did sort of test its all-time highs. Sometimes these things will poke out, like with the indexes here again. Sometimes they poke out to all-time highs. It makes headlines, and then we kind of pull in or whatever and have a pullback. But you can kind of see this. The stocks had great power in here, but it's pretty tight. This looks like a normal pullback, to be honest with you. Again, maybe meeting up with a 25-day line with some of these stocks would be pretty good opportunities. So we'll see how it goes. I'm going to mention this one. I would consider this speculative. This is a firm holdings, AFRM. And you can see this was the buy now, pay later. I'm going to pull up the monthly chart. So I don't even know. This was at I'm going to say 180, and then went down to 9. So you're not talking about the highest quality merchandise out there, but it is a real company. It's got $500 million in revenue a quarter. So it's not like, some nothing company. And it is kind of the leader. I know they have deals with some of the big, retailers to do it online and stuff like that. I'm just flagging it because it has shown really amazing strength here, 4 straight kind of huge volume weeks. Is that just sort of the speculative juices flowing? Maybe, but it's not like it's a, if this went from, $6 to $12, I would think differently. Going from 20, whatever, 6 to basically doubling here. Let's just see what happens. I'm kind of flagging it. It's not for the rent money, but it's definitely overdue for a shake. You know what I mean? But if it can shake and kind of hold in there and not give up too much ground, it could be an interesting idea, especially if they release some numbers from the holiday season, that sort of thing. Back on the more liquid side, this is Advanced Micro Devices. Of course, they're kind of competing with NVIDIA now. That's a lot of the excitement. Here's a huge, volume cluster. The stock does have a history of some of these volume clusters falling flat, so I would say it generally hasn't been some longer term, I'm going to hold this for the next year or two sort of play. But with that said, it just kind of exploded higher here 3 weeks ago. It's one of the few growth stocks that's really followed through on the upside lately. I guess there's been a few chip stocks. So let's just keep an eye on that one. I mentioned this last week, Broadcom, and wrote it up. I know everyone loves $1,100 stocks, but this right here was the largest volume week since 2018 for the stock. Obviously, that's not me and you buying, $1,000 worth. That's huge, huge money. And you can just see, again, on the weekly chart, yes, it's high priced, but very, very tight in here after the move. Again, could easily get a shake or whatever as some moving averages catch up, or if there's rotation out of growth and into cyclicals or whatever into the new year. But certainly looks very proper. And chip stocks as a whole, by the way, this is the SMH, since I didn't show any of the sectors early on. It did pull into the 25-day line here around Thanksgiving. Nice acceleration higher. This was that one-day shakeout. I think it was last Wednesday, like I said. And it's kind of shrugged that off. So that looks pretty good. Short term, you might be looking, if we do pull back in the market, maybe looking for some short-term relative strength. Let's see what some of these sectors and individual stocks do compared to, say, last Wednesday's shakeout, compared to, say, I'm going to make up, say, next week we have a shakeout, which ones are higher, which ones are lower, that sort of thing. Either way, back to AMD and AVGO both look pretty good in the chip space, okay? Zscaler, I mentioned CrowdStrike. Zscaler is one of these pullback names as well. CrowdStrike's probably the leader, but I would say Zscaler's, certainly acts well. I mean, again, it's up 8-9 weeks in a row. At this point, we'll see where it closes. Very, very tight in here. Let's see if the moving averages can catch up. Again, you're just kind of getting it no real pullback to this point, okay? And then Expedia would be another one that's not true growth, but it just seems like something's up here, whether it's just, valuation or everyone is kind of, even though earnings were going up, people here, perception was going down, saying, yeah, earnings are good now, but what happens if the Fed destroys the economy? Now that the Fed says they're not going to destroy the economy, they might even help it. People are totally changing the perception of the stock. So it's not changing the world. It is what it is. Everyone knows Expedia, I think. But just a lot of buying down here. I've mentioned it before. And my guess is, we'll see what our earnings are coming out February 8th. But my guess is the first pullback with some of these odds favor the first pullback will be buyable. No guarantees. It depends how it pulls back. But my guess is, if it does pull back reasonably well for a week or two, could provide an opportunity. Last but not least, let's get into some of the, quote, newer names. These aren't newer. And, of course, I'm going to mention Eli Lilly because why not? It's a free video. But, just very, very tight in here. It's a $600 stock. But you can see it didn't prevent it from doubling. What was this? This was the March low, I think, March, April right here. So I mean, it doubled from April to whatever, October, September. And it's just basically marked time since then. It wouldn't take more than a couple of good days for the stock to look better. The RP line is lagging, of course, because the market's been up. Stock's been sideways to down. But I'm just kind of keeping an eye on it. I mean, I don't think the story's changed. I think it's just kind of the focus has been elsewhere. Interesting, NVO, Novo Nordisk, actually a little bit stronger. But they're both kind of in the same, basically sitting out the rally here during the last couple of months, digesting what were, really big gains over the prior, 6 to 9 months sort of thing. So let's just see how that works out. Fresh Pet, FRPT, this is kind of a, not a binky of mine, but just it's an interesting, it's pet food. It's easy to understand. It's not like a cookie cutter story, but it's kind of an easy consumer story to understand that should have legs. People spend more on Fido and Whiskers every year. And this is sort of, not organic, but, healthier food for your pet and stuff like that. The numbers, the company had issues, but the numbers, have been good and actually accelerated here lately on the sales side. Earnings should kick into EBITDA is positive, cash flow. It got wiped out here during the correction, tried to break out earlier, but now it's really come storming back. It's not the most liquid name at all, but just kind of an interesting, kind of fresher name that's trying to get going. Intracellular Technologies, been following this forever. They have one drug, so it's that kind of biotech name. But the drug is selling well, as you can see, and it could get approved, or at least it's going to release some data next quarter, so there is event risk there. Not my favorite situation. But they're going to release data in the first quarter about a new indication basically for their drug. Big, long base. Biotechs have been out of favor for the last 3.5 centuries, it feels like. But starting to kick into gear. Again, there's some M&A chatter just in the group. There's been some buyouts. But ITCI has kind of been interesting. I'd say mid-cap, small cap, mid-cap. It's a $7 billion market cap. Although it's got some growing sponsorship, okay? And just also on, these are sort of pulled, I forgot to mention this pullback. This is Wingstop. It broke out basically November 1st with the market. I think it was the same day. And it's been marching higher here. It doesn't have an earnings date. They usually report, third week of January, say, something like that. Maybe it'll be a little bit later no, I take it back. They didn't report till February last year, so I'm wrong. Sorry about that. So who knows when earnings will come out. But again, this might be a pullback one here if you get maybe down to 250, maybe below, moving averages catch up, some rotation out of consumer stocks for whatever reason. And then last but not least, this is just something I noticed in running screens actually for strength. I wasn't looking at this in particular. This is Vornado Realty Trust, which is kind of like consumer real estate, commercial real estate, which has been kind of the, next to Chinese, stocks. I mean, in terms of the news, it's been really bad. You can see it got destroyed during the bear market. It did have a rally in the spring and then kind of built this base, and it's been acting well. I mean, it's been under accumulation. I'm not going to pretend to be an expert on the company. I'll let someone else figure that out and tell me all the reasons it won't work. All I'm looking at, though, is it has shown up on screens for stock strength, and things look to be, turning around. Still profitable. It's a REIT, basically. So still profitable on a cash flow basis, and it is kind of has this nice sort of tight thing. So if you want to, if you know more about this area than I do, and you want to, nibble on a dip or look for a pullback resumption pattern, that sort of thing. But I thought that was kind of interesting. So just overall, back to the market and the NASDAQ, it's been a good year for the big cap indexes. I think the QQQs are up huge, but a couple of things. Number one, there's no progress for 2 years. So they were down big, up big. Number one. Number two is a ton of stocks, and not just small cap stocks and Russell 2000, but a lot of the growth stuff I look at, did a lot of the, I'm pulling this up randomly because I was looking at the chart before the video, but this is like Snowflake, which does look pretty good here, but just a ton of growthy liquid names. This is a monthly chart. It came public during the pandemic. Growth is great. Stock gets up to $400, gets down to say 120, and then it spends, a year between, 200 and 120 or whatever it is. Okay. Just a lot of, I don't have a number for you. I don't have like a statistic, but there's just a ton of names like that. So to me, if this is the real deal, you're talking about a lot of the market that is not, up here. It has been bottoming out. It is coming up. Maybe it's up here, maybe it's stronger than Snowflake, but I just think there's a lot of potential there if things go right. As always, we're going to take it day to day, week to week. Right now, I think, yes, it's a little hot and heavy. There's definitely the potential for a pothole. Everyone knows it. But so far, so good. And I would just say coming off two I'll be kind and just say very tricky years, I think there's great potential if things do go right, and if you can get in the right stocks and hold through some of these shakeouts in 2024. Okay, that's all the time I have for this year. I hope you have a great new year again. We'll see you next week, and I'll be back again next Friday for another Cabot Weekly Review.